Good afternoon. If you can slowly get ready for the second table. All right, so now we have everyone. Good, so good afternoon. We'll start our second panel now, called Financial Markets and Sustainable Growth in Latin America. So we'll try to connect the discussion from the first panel also with the second one. And we have 4 presenters, Stephany Griffith Jones, who will join us online, Antoni Estevadeordal, Fritz, and Maria Antonieta Lins. And I'll introduce then each of them on their turn. Stephany is not yet online, so we start with Antoni Estevadeordal. We thank you very much for being here, Antoni. And he's a non-resident senior research fellow at the Inter-University Barcelona Institute of International Studies, IBE, who is a partner from the Jean Monnet Network at Pompeu Fabra University. He's held several senior executive positions at the Inter-American Development Bank. Most recently, he was the IDB, International Development Bank representative in Europe, based in Brussels from 2020-21. Previously, he was head of the IDB Migration Initiative 2018-20 and manager of the IDB Integration and Trade Sector 2007-2018. He has extensive experience in designing, negotiating, and implementing development projects and partnerships with an expertise in international development, development finance, and trade policy, and trade facilitation, among others. So thank you very much. And then we have about 15 minutes per person. Thank you.
Thank you very much for the introduction. Thanks, Dimitris, for the invitation. Also to Andrea to allow me to represent eBay in this network. When I told Dimitris about my presentation, I was not sure why I'm in this panel. I'll talk a little bit about Latin America, but I think it's more a good bridge between what we have heard this morning and probably what we will hear tomorrow afternoon. I will talk a lot about development cooperation. And I'll put as an example of, for this discussion, and I'll try to be a little bit fast on the half of this presentation. There are many slides, I will just move a little bit faster, and you can have it after all if you wanna look at more carefully. But the main kind of thrust of the presentation is to convince you that the architecture of development cooperation is under transformation. It has been under transformation for several years or even several decades, but it got a different impetus after the global financial crisis and especially after COVID. And we are seeing a lot of innovative proposals in the context of the MDB ecosystem. We heard a little bit about development banks this morning on the introduction. So I'll move a little bit from the private sector financing that we heard the panel before to a more public development finance. So I'll talk a little bit, just very briefly, 2 things that you probably know very well. One is if we have the financial tools that are required to address development challenges, and we know that there's a big gap there. That's the point number 1. We will look a little bit about things also that are very well known, just as a reminder. What was the impact of the global financial crisis and COVID-19 in the developing world, especially Latin America? And what is more important for this presentation for me is to share how were the responses that were given to this crisis by the MDB system, the multilateral development banks system at the global level and at the regional level, and some of the proposals that are being discussed today for reforming this architecture. So I'm going to go very fast on the first tool, just show you some slides to give a sense of what these slides are from the most recent report from the World Bank that actually was presented in the spring meetings in Washington just a few weeks ago, actually, where the World Bank tries to make the case that there's a huge financial gap on development finance to address these global challenges that we all know. Of course, we can talk about that we are not on track on many of the SDGs. When you look at the poverty indicators, there's new issues on the table, like the issue of conflict, displaced people. This is increasing by the year in recent times. Not to say anything about climate change, that we have already talked about these things. And if those challenges are kind of growing for the developing world, the financing to support developing countries to face these challenges is not increasing. Actually, it's in a way decreasing in some cases, where you look at the private sector financial flows, or even the official development assistance is not basically growing at the speed that they should in order to cover these type of challenges. Also at the national level, the fiscal space, we know, and we talk a little bit about already, the countries don't have the domestic tools to address that. So that's the kind of the context, that there's a recognition by many development experts that the financial needs are well below what is required to address these challenges. Two examples that these things are very kind of have created a momentum for thinking about how to reform or how to expand the financial capabilities of the system to address things, is to look at the two crises, the global financial crisis and the COVID-19. I'll just give you a couple of stylized facts that you well know, and how they relate actually to how these crises were taken by the multilateral development banks. This is a very, it's a very good way to see how COVID crisis is more comparable to the Great Depression, after the wars, or what happened after the war, than to the global financial crisis in terms of the impact that it had on global growth. The case of Latin America maybe will be discussed later by other panelists, is the same thing. See the last blue drop, which indicates that the huge impact that the COVID had in Latin America, nothing compared to the financial crisis, even the debt crisis, and more closely to what happened during the Great Depression. Latin America, since this is the topic of this panel, I think, if you look at just only COVID, we know that Latin America was one of the regions that suffered more from COVID. Huge drop of GDP, real GDP growth on 7%. Many, huge drop compared to other regions, and also the recovery was not as important as others, in relative terms, given the impact of the COVID. So let's just give you a background on how these crises have affected the way that the development assistance or the development financial system has responded to that. So these are the facts. In terms of the responses, there are many different ways of looking at this. One is to see how the responses, what the responses was at the national level. This is basically the stimulus packages that were put into place by national governments. COVID had a huge, these are kind of preliminary data produced by McKinsey. I think it's a little bit different, the last data. This was produced in 2020. But the stimulus response that were put together by different countries, both developing countries, were massive compared to what was done during the financial crisis. That is a striking kind of comparison between the two. The IMF, I'm not going to talk about the IMF. Is a completely different story. I'm going to exclude this slide is to make the point that the IMF assistance, in the case, this is to compare to Latin America, is a completely different story from the MDBs, and you cannot mix the two. Actually, if you want to discuss this in more detail, Latin America was a kind of an outlier on the type of assistance that they received during COVID. More similar to what they got during the 2008-2009, which is called these flexible credit lines. Very different than what other countries got. But I just put this slide here because the IMF is a completely different way of handling this type of support. My focus is actually on the major development banks, starting with the World Bank, which is the kind of the center of the system, but also very important other regional development banks, the Inter-American Development Bank, the European Development Bank, the Asian Development Bank, and the African Development Bank. This is a very interesting picture that just gives you the asymmetric response of these banks to the size of the crisis. the increase in lending, what is called here the commitments, commitment means new lending, new loans, new programs that were put into place. The increase that they had for the global financial crisis were much, much, much higher than the one that we see in the COVID. When the crisis was, the size of the crisis was completely reversed. They should have responded much more during the COVID in relative terms than what they did in the this, the reasons for that, but that's the actual fact. The increase in lending on average for the global financial crisis in 2007, 2009 was around 70% more than the previous period, 70% more lending. In the case of the COVID, the increase was only around 40%, a little bit less than 40% globally. When the crisis were completely, the size were completely reversed. COVID was much, much larger than the global financial crisis. So there was something went kind of wrong here, and why the COVID was less attention. I have some slides here which I'm going to skip because of time. This is an interesting kind of when you start comparing different banks in different regions, how they responded. Just let's take Latin America, the Inter-American Development Bank, which is actually my own institution that I was working at the time there. We, for example, this figure looks like that we didn't do too much. The increase in commitments, new programs was very, not much more than what we were doing before. That's the yellow line compared to the green line in the case of the EIDB. World Bank and IDA, which is the concessional arm of the World Bank, were much, much larger increases. But another way of looking at these numbers is what we call in MDB's language, the disbursements. For example, in the case of the IDB, what we did was not to put new programs into place, not to negotiate new agreements with countries, but actually speed the programs that were already in place, basically to reshuffle some of the money that was already approved in previous commitments, in previous programs, and disburse this money in a much faster way with less conditionality. So there were kind of the different ways in which the MDBs responded to that. Very heterogeneous response. The ADB is massive, was a very kind of successful programs they put together for Asia. In sectors, I'm going to say something also a bit here because it's interesting. There's a lot of letters here. The two big bars, the largest one refers to what is called public sector management programs. This is basically budget support. This is programs to basically give money to the governments to deal with the crisis, what we call budget support in MDB language. So that was the major increase in lending globally. This includes figures for all the banks. The second one is what is the SOC, which is social protection programs. This is basically cash transfers to protect basically large populations affected by the COVID. This was a program, as you can see, that was not very large before the crisis, before COVID, and it was massively increased after COVID. But interestingly, and this is kind of a problematic, that we don't see much increases in health. There's a huge increase with respect. This is the 1, 2, 3, 4, 5 column, and also the second one in education. Those are social programs that we know that were heavily problematic during COVID. And even though there were large increases from previous years, in terms of size, they're not very big. And we get some lessons from here. This is private sector, not much room for private sector, which also is an issue. There was not much increase compared to sovereign lending. This is non-sovereign. This is the lending that we do to private sector entities. So what are the lessons, kind of very general, or what happened in these two crises, and in part what explains this kind of increased interest in reforming the system? One is the first one that I already mentioned. The MDBs responded more rapidly at more scale to the global financial crisis, maybe because of the institutions who were more prepared to that, the way that these institutions are basically set up, rather than the COVID-19, even though the COVID-19 economic and social impact were much, much larger than the GFC. So why the system were not able to provide the financing that was needed? That's the first question that you have to ask. The private sector also was not very taken care of, especially SMEs and so on. Again, there's another red light for these institutions that we should be able to provide more countercyclical finance in the cases of this global crisis. An area for thinking about reforming that part. The third one is also something that is being already in the discussions, which is we have to pay more attention to the health sector. Is an underfinanced sector before the COVID. It's still an underfinanced now, and there's a lots of talks about how to reform the system for providing for the next pandemic, which everybody knows that will happen at some point. How we are going to prepare for that. And also the last one, which is a little bit is a critical also of the system, that MDBs, even though there was a lot of attempts to coordinate efforts, the system did not function collectively to confront the challenges. Every bank did whatever they could on a bilateral basis, and that's another red light for future actions. And the last part, which is basically to talk a little bit about how the MDBs are thinking about these experiences in the GFC and the COVID crisis. This is a very interesting. You may have read this one. There's other people in the U.S. administration, also in the European Union, making claims similar to that. This is a statement by Secretary Yellen, the U.S. Secretary, U.S. Treasury, who said very recently, 2 or 3 months ago, we do not yet have sufficiently robust toolkit to address with the scale and urgency our global and cross-border challenges. It's basically questioning if the MDB system as a whole has the capacity to actually deal with the type of development challenges that are ahead. And this is from the U.S. Government, which sometimes, they're not very kind on kind of multilateral responses in general. So it's kind of very telling that they put these things. That's one of the reasons that they replaced the president of the World Bank. That's the same day, actually, that they did this statement, was the day that it was replaced. I just want to kind of here highlight some attempts. These are kind of institutional groups that have been put together in the last few years. There was one important report that some of you may know, which is the G20. It's called Eminent Persons Group on Global Finance Architecture. This was a group that was put together right after the global financial crisis, what we should be doing for the next ones. Not much happened, even though it's a very important G20 report. It was a report responding to a crisis. After COVID, there were more institutional settings for discussing things. There are 3 that you may want to know about. One is called, I'll just have a slide on each of them if you want to know. One is called the Bridgetown Agenda, which is promoted by the Prime Minister of Barbados, Mia Mottley. It's a very interesting proposal. A second one is a more technical review, which is called the MDB Capital. Talk a little bit about this. Adequacy Framework is a technical document. Also, it was put together after COVID, how we can do better our job in responding to this crisis. And the last one is the recent report that was presented by the World Bank Group just a few weeks ago during their spring meetings. Just take my time, just like 3-4 minutes more. And all of these last 3 ones, they are reports that are thinking about the past, what we did wrong during the global financial crisis, what we did wrong during the COVID, but also facing, kind of dealing with what we have to do, anticipating what is clearly a challenges, which we already have, which is the climate change crisis. So in a way, it's anticipating, not responding only to a past crisis, but how we face this incoming climate change challenge that we have. I have 3 slides here. I think I'm going to skip. You can read about that. The Bridgetown Agenda is most about how we could lower the cost of borrowing from these MDBs, especially middle-income countries. All of the kind of criticism of all these proposals is that you will see that most of them are thinking about the MICs, the middle-income countries, not much on the low-income countries. That's one criticism of these proposals. Sorry, I think I skipped one. Yeah, sorry. The World Bank Group is about how to deal with the climate change mostly, as you may have heard a lot about how the World Bank should shift. Even some people talk about the climate bank instead of a poverty bank. There's a big discussion about what this means for the bank. But that report that was produced for the spring meeting just a few weeks ago is about mostly climate change. And this is a kind of a very technical report that was produced by a task force of the G20. And basically here the point is how we better utilize the resources. These MDBs have a huge capital, and the belief is that this capital is not used in the most efficient way. Sometimes you hear calls about increasing the capital, the capital increase. This has been always the traditional way in which MDBs are trying to increase their financial capacity. The point of this report is that before looking at increasing your capital, try to use your capital that you have in a more efficient way. Actually, this is what I just mentioned. The current kind of balance, if you will, of the MDBs is 500 billion on equity. This is what is basically on the books of these groups, of the whole group together. And the point here is that these 500 billions are not leveraged at the level that they should be. And the question is what can we do? Some is political, some is technical, so that we can leverage more these assets that these MDBs has in order to increase their lending, how you can lend more with the same capital. Keeping, and this is one of the big restrictions that these MDBs have, the famous AAA rating. You don't want to overextend yourself because then you lose your AAA and you have all the issues related with losing this status with the credit agencies. And I'm just finishing with this. Yeah, this is just kind of the two more, but that's basically the one. So the kind of the big debates, and this is just a debate because there's no yet kind of consensus on how to do that. The big debate is, especially at the World Bank, but also the regional development banks, is how you can extend a mandate that is now very clear, basically, mandate on ending poverty, how you extend that to a climate change mandate. Are those separate mandates? Should be seen as the same mandate in a way? And this the kind of the reasoning behind is that addressing global public goods should be connected to also the issues of poverty and inclusivity and so on. But there's a kind of a debate about how you extend the mandates of these institutions when the toolkit that you have is limited. And here there's two kind of big concepts. One is how we change the way that these MDBs operate in practice, and there's a lot of proposals here that maybe we have time to discuss, basically a new operational model. And more importantly, I think, at least in the short run, is how increase the financial capacity. So I'm finishing with this one very quickly, to summarize where the discussion is. One is there's a call by governments, both, I think, developing, that there should be a more ambitious vision for reforming MDBs. There's a clear call for putting more attention to global public goods rather than national programs. That makes very complicated business for these banks, but the idea is to how you actually deal with health, with climate change, that are collective issues rather than national programs, which is the traditional way in which these MDBs operate. More MDB collaboration, that's clearly a case. How we reform and how we enhance the private finance side of these the banks. There's a whole issue about how to use better the donor money. It's a huge, as you know, concessional money that is being put into these MDBs, and it's not clear that it's being used in the same. Usually we use it a lot as simple grants. I think there's a lot of more creative ways of using this type of donor support in de-risking or other types of mechanisms to actually leverage more capital. And the last one is exactly what I just said at the beginning, is we have to look at more ways in which the capital that we have can be used in a much more effective way. And I'll finish this. Sorry. Thank you.
Okay. Could you put up the presentation? Okay, so I start. I try to save time. So I will bring a different topic here, which is, as we are in a seminar on Latin America and European Union on monetary regionalism in Latin America with a specific perspective. So I will talk about monetary regionalism as a booster, as a potential booster for reindustrialization in South America. This is based on, in part, on collaborative work with colleagues, which just came out at New Political Economy, and another paper I wrote on a hot topic. Yeah, okay. Yeah. Okay, so I will start with conversations at the beginning of this year of a common currency for the Mercosur, the member countries of South America, in a meeting of the just elected Brazilian President Lula, together with the Argentinian President Fernandez. They announced that they would reinforce the Mercosur regional integration and create a common currency as a booster for reindustrialization in both countries. This made big waves in the media, and most reactions were quite negative. I brought you here two high-level international, very good economists, Olivier Blanchard, which has been the former IMF chief economist, and Paul Krugman, and they, in their Twitter accounts, were very clear. Blanchard, this is insane. And Krugman, a nice opportunity to apply the theory of optimum currency areas, which tells us this is a terrible idea. What I would like to do in the next 14 minutes is to take you a bit deeper into that, to ask if it's really such a terrible idea overall. How does it go? Yeah, okay. So, no, that's too far. Okay. Yeah, okay. So what I will do is I will go in 2 minutes through the optimum currency area theories with you, which is a simple thing in its basic point. And then argue with, I try to convince you that it cannot be applied as such for the Global South. We have to amend it and adjust it. Then I will go into a case of regional monetary cooperation between central banks in the Mercosur, which exists. And my argument will be that looking into this existing arrangement gives us an idea for a path towards more collaboration, because regional trade and the Mercosur are very key for reindustrialization, because the intra-regional trade is from different quality compared to global trade. And then I come back to this common Mercosur currency. Okay, so what is the optimum currency area theory? It is about countries have to be very similar in economic terms. They have to have mobile factors, they have to have open trade, and they have to have rather diversified production patterns and trade. And this ended in a theory of sequencing, which was very much built out from the European experience, and where economists like McKinnon took in political science analysis of functional theories from Haas and others, thinking that there's a clear order to proceed in regional integration. First, you have to integrate trade. Then you can start integrating capital markets. Then you go for a monetary unification, and then you go to political integration. We know where we stand in the case of the European Union and the Euro area, not at the end. But if we look at the world, it's clear that the blue line up here, that's the European, the Euro area. This is a clear case of high trade integration, all fine. The second line is NAFTA or CAFTA. It's trade between US, Mexico, and Canada. This would make the case in this kind of theoretical thinking for monetary integration. The red line below is Mercosur. So from that perspective, it's quite clear Mercosur is no case, and it's far away. It's really an insane idea for monetary integration. But the problem is that, as I said, intra-regional trade, not only in Latin America and South America, but also in other parts of the world, like, for example, Southern Africa, has a different quality of trade. The participation of high-tech products in intra-regional trade and South-South trade is much higher than global trade. I brought here the numbers for Brazil. In its exports to the world, it's now at 3/4 of its exports with commodities. But in the Mercosur trade, it's 80% manufacturers of all kinds of goods, including rather high tech. So this is a different type of trade, which is important for these countries. And should I go? Okay, yeah. Okay, and two PhD students of mine have done a study on the effectiveness on the effects of Dutch disease, which is the increase of the deindustrialization due to the increase of commodity prices on regional trade. And they found some results that show that regional trade of this pattern is somehow protected from Dutch disease. So it's even counter-cyclical. Plus, there's a problem of the indigeneity. We have a lower level of regional trade at the South-South level because exchange rates of southern countries are more volatile than of advanced economies. And this inhibits regional trade. So we have a problem of endogeneity of the order. If you do not cooperate monetarily, you will not get to a higher level of trade integration. So that's the argument why there are some reasons to revert somehow the order. Okay, I skipped that. Okay, now I come to my case, what I call embedded regional monetary cooperation, the Mercosur's regional local currency payment system, Sistema de Pagamentos em Moeda Local in Portuguese. This is a very small thing. Before I go to this, I explain what is a regional payment system. It exists in several parts of the world. Europe had one in the post-World War, which was very big, where I take the example of trade between Argentina and Brazil. If there is a Brazilian exporter exporting to Argentina, he or she will have to emit a bill in US dollar, send over the goods to Argentina, and the Argentinian importer will have to get dollars to pay this Brazilian exporter. So this Argentinian importer in the last case has to go to the US system to get dollars. And the Brazilian exporter will have to go back to the financial system of the US in the last instance to change this back to real, to Brazilian currency. So we have three currencies involved here, which is transaction costs. What a regional payment system does is to take away the third currency, the US dollar, and it enables the producers to trade in regional currencies, and the central banks settle between them the differences in bills and payments in local currency. Okay, yeah. No, that's too far. This SML is a very small thing. It's very small. You see here, you saw the low levels of trade integration in the Mercosur. It's for Brazil now, it's lower than 10% of its overall trade. It goes to the Mercosur. And from this bilateral trade, which is low, only between, you would take the orange line, between 5 to 7% go via the SML, because this is a voluntary mechanism firms can use this mechanism to do their trading with the neighboring country, but they do not have to. So it's 10% of, it's less than 10%, then less of less than 10%. But it is, as I said, car parts, pharmaceuticals, leather, etc., a huge variety of products which go to this mechanism. And firms, having started to use that mechanism, continue using that mechanism. So the firms are very happy, those which went to the mechanism. How did this come? We, in the paper, we call this a success story, even if it's so small. We call it a success story because it was and is the first institutional cooperation among central banks in the Mercosur. And this in a period of complete agony of the Mercosur, which is quite astonishing. And the fun part of this paper was that we did interviews. We are economists for economists, and we did interviews. Economists usually do not do interviews, and we did interviews with central bankers, which is quite difficult to do. They usually don't like to talk too much to the broader public. Okay, and what all of them told us, central bankers in Brazil, in Argentina, and Uruguay, was that this building of this institution, of this regional payment mechanism, was something where they could really build confidence among each other. They could learn how the others are using their payment system, how they're doing it. They could build this mechanism and build rules, etc. So the confidence mechanism building was present for all of them partnering here. And in midst of this agonizing Mercosur, where nothing happened, and you had deconstruction, and Andrea and Andrea know that much better than me, it was an iterative, continuing mechanism, institution building, because it's based on bilateral agreements between always two countries, where first Argentina and Brazil started in 2008, and then over the years, both of them included Uruguay, and over the years, they even included Paraguay. So all the 4 core member countries are now connected amongst them in this mechanism over a long period of time. And the central bankers explained us that it has to be a very simple, and by this also somehow small mechanism, because for them it was a guiding principle that no costs and no risks should be involved for the central banks which participated. Quite differently from the experience of other regional mechanisms in Latin America. The aim really was they defended this fiercely against crazy ideas from others, as they said in Mercosur fora, that the aim was to reduce transaction costs by taking out one currency, and the focus also, especially for this, was on SMEs, small and medium enterprises, because for them it's more costly even for size arguments to go in the foreign exchange market. And if you look at it from that perspective, the mechanism is not even that small, because SME makes up to 10% in regional trade, and if the mechanism covers 5 to 7% of regional trade, so supposedly many SMEs are in there. The limitations are, and we did not understand this before we could talk to central bankers, it's extremely asymmetric in its use. Almost 100% of the operations, if you look to Brazil, Argentina, for the others it's less asymmetric, it's Brazilian exporters using the mechanism and not the other way around. Why that? It is that Brazil has a legacy of repressed dollarization. You could not, for a very long time, could not use the dollar in the domestic financial system. So to justify dollar transactions, you had to do a carta de cambio, a very transaction-intensive administrative procedure, which is very cost-intensive for medium firms, which usually do not do that. So to take that out, that was the main intention of the mechanism. While on the other side, For Argentinian exporters, they had no incentive to receive in pesos. In Argentinian pesos, they want to get dollars because it's much more secure, more stable. You go around capital controls, etc. Okay. The context, and this is for the Latin Americanists, for the central banks, this was a very clear idea about the crazy ideas present in other regional projects, which came from the 1970s, 80s, from the import substitution, industrialization period, or came from the Alba socialism in the 2000s. So they said nothing like that. We keep it very simple. With that, the macroeconomic effect of all of that was kept very small, but still they said, that's our stuff, we do it differently. And we have in that paper a theoretical background from Hirschman, although Hirschman, which works a lot on linkages, and also on the relevance of small incremental mechanisms. I left it here out for a question of time. We saw no linkages going out of this mechanism. In the literature on regional monetary cooperation, the idea is that these mechanisms are good as a starting point for building confidence, and then other institutional outcomes come out here. But there are none. There was the idea for a bilateral swap agreement between Argentina and Brazil in 2009. And again in 2014, but each time China came and offered one, and then they dropped the bilateral idea. Okay, concluding. The Mercosur is a strategic project if these governments in the region take for serious the idea of reindustrialization. I showed you the different patterns. They have higher resilience against global shocks. And there's also the political economy behind that a stronger regional bloc group also gives higher power in global arenas in terms of negotiation position. And we have also the new kind of asymmetry of the global monetary order, the militarization of global finance, the use of the US dollar as a means of sanctions against specific countries, where countries which use the dollar have to bandwagon if they want or not. So there are good reasons to think about alternatives, but a common currency between the Mercosur countries is something very far away. The Argentina and Brazil, the biggest economies, are in very different stages in terms of business cycle, level of economic stability, etc., etc. So this is something for far away. But in Europe, the creation of the euro took decades, and it started with the European Payment Union, which is a very similar mechanism. I do not want to argue that Latin America will follow, it could or should follow the very same road, but it can be a beginning. The SML, this infrastructure to do payment in the regional context and to make it easier the life for regional importers and exporters, can be very well used, or could be very well used as a starting point. It's a very small diminutive mechanism, but it has been the first cooperation which has really worked, which is an exception in Latin American regionalism. And it would be rather easy to scale the mechanism up if you just do more diffusion work. That's the argument of the central bankers. And there could be potential linkages for, well, before you go to a common currency, you could use a common denominator or whatever, and this could be used as a basis for it. And central bank digital currencies, one could think about a potential role for that. So let's experiment, but along existing rationalities. And this has to take into account also, here we took very much the rationale of central bankers. Of course, there are other actors involved, but you have to take into account these rationalities instead of putting big headlines up. And I take here an argument from José Antonio Ocampo, who always has been a fierce defender of Latin American regionalism, but has the position that it has to be depoliticized to a certain degree. to have more results. Okay, thank you.
Let's check again.
No. Okay. Yes, she's not.
So
No, it-
I have the pleasure now to present Maria Antonieta Xillis. She's an economist and associate professor at the Institute of International Relations at the University of São Paulo. While she also has extensive experience as a consultant, and her main research interests are international political economy, monetary and financial economics, international finance, and regional financial integration. The latest publications are devoted to the effects of financial crisis on Latin American countries, and of course, a member from the Economic Network. So, I'm glad to give you the floor.
Thank you. Good afternoon, everyone. Okay. I'm very glad to be here, and I thank everyone also to be here after lunch to talk to us. So I had, when I started writing the paper, there are many, this paper which I'm going to present, there are many aspects that should fit in it. But for the presentation, I think I would love to present you what is the situation in Latin America. And I took the 5 largest economies of the region just to take a look. But the title, what I said, are they any different this time, is like making a joke with this very well-known book by Ken Rogoff and Carmen Reinhardt about 800 years of financial crisis. But what I want to talk to you about is that, okay. Yeah, it's like something that in this morning was this expression by, I think it was Mr. Grotzus, perma-crisis. And it was the first time I heard that, and I think it applies completely to Latin America. We have one crisis after the other. And when I was starting working on this subject, I thought that in our group, in our project, like 4 years ago, we were already looking at the effects of the global financial crisis. Now we are looking at, actually, Latin America never stopped being in crisis during all this time. And that's more or less what I want to show you, because there were moments of growth, of some recovery, but we cannot say that the region has attained a sustainable growth, not at all. In the last 15 years, if we start looking from 2009, 2007, 2008, we see that, that not much has been happening. And because of that, or together with that, what we see is that the situation of instability in the region has been growing and growing. And so we cannot talk about, we could, of course, look at the policies each country has implemented for the crisis, but we cannot talk of a change. Actually, even though, and that's my argument here, we have been through also huge political crisis and huge political changes in the region recently. So first, so then when the pandemic hit the region, we saw the countries not on their best feet. They were the best of shapes. And actually, what we have been seeing, and even before the pandemic, is a very dangerous increase in inflation, which for Latin America is different from other regions of the world when we think about inflation, because we have this past, this traumatic past, inflationary past, and we have all that brings together in terms of letting people lose their income and everything. I mean, inflation is, in my opinion, the worst disease Latin America has. And Brazil and Argentina are the largest in this case. The other thing is important to look at, and I'm going to go quite fast on that, is that the increase in inequality in the whole world during the pandemic. And it was not different in Latin America, although the figures are not so eloquent yet. I've been looking at them, but okay. And also Antoni has already talked about this. So just to oh no, I put one and not the other. I have to put just one very simple thing. So I took Argentina, Brazil, Chile, Colombia, and Mexico. And if we see, I mean, looking at this, there is very little growth in GDP during this period, as you already mentioned. But when we look at inflation, I just took some years from 2017, because for Argentina, the data are not available for 2 years in the middle because of many, many things we can be discussing here, changes in policy and in invasion in the statistical office, everything during the 2000s. But if we look, sorry, I cannot do both things at the time. Yes, I'll stop the movie. So if you guys take a look about the Rio numbers, the actual numbers are just until 2022, of course, but those are the forecasts of the World Bank. So we see inflation in Argentina in blue, in very, very, but if we take Argentina out, because it's a very special case and a very different case, we can see that the other countries have also had lots of troubles with inflation. So we all are seeing from the pandemic, but 2021, 2022 related also to commodities price, the invasion of Ukraine by Russia. But it's something that I think it's very important to look at in Latin American cases because of the effects it has on income, on consumption, on well-being, everything. If we look at the employment rate during the crisis now, taking after the pandemic too, now we see that there were apparently not very high increase in unemployment, but what really happened is a growth, an increase in informal work, which especially during the pandemic. But okay, what do we have? Because today we are discussing here the whole day about the financial aspects. And so I wanted to look generally to those economies, but to go to see, okay, how are financial markets working there? And I don't have figures for financial markets today yet, but I have my first argument about that is how can financial markets work in a context of instability, economic instability, of inflation, incapacity to look ahead. And Okay, then I'll go back to some other aspects about. But what we still had, despite the crisis, in some of the countries, it's different from one to the other, is a large amount of reserves, which are inherited or are coming from the past, the 2000s, but were absolutely crucial for Brazil and Mexico, especially, to face the crisis, and also to work on expectations, another crucial aspect of the financial markets movement. But okay, if we add to this situation, you could maybe tell me that I am just looking at short-time indicators, like macroeconomic management, and not the real structures. But the markets, the financial markets, work with that and work with these expectations and like transmit to the rest of the economy these aspects. So if to this poor economic situation we add the political instability, what can we have? And so first, let's see some of the huge, I just took one of each country. Argentina is, unfortunately, our case. I mean, it's when Mauricio Macri went to the government, if I'm not mistaken, in 2016 or 15, he tried to bring like a more liberal vision to the economy, to the political economic policy, and he tried to do some, I guess, important things that were messed up during the previous governments. For instance, the adoption of inflation targeting by the central bank, which in a country with this historical of inflation is very important, but it didn't work. And many of the reforms he was trying to do did not work as well. So first, the policy shifts failed. And then after the other election, when Alberto Fernandez went to the government, he had a problem inside the government. Let's say, his vice president is his worst enemy and was working against him all the time. This, together with the imbalances, the problems of the crisis, and then again, of course, the pandemic, and then so put the country in a situation, in a very complicated situation. And to be fair, it is important to say that also Alberto Fernandez took a lot of money from the multilateral bodies, from the IMF, because the debt situation was also complicated, which bringing ahead brought the country to situation of default that it has been living. In Brazil, the confusion is so high that I don't know how to start to talk about, but let's look back. And now our Jean Monnet Network friends know because they were there, but look back. First, a lot of corruption scandals, which afterwards, okay, there was corruption, but there was also a mismanagement of the justice system, which is now absolutely proved. So put the country completely out of pace. Before that, or together with these cases, corruption cases, Brazil has lived one of its worst recessions in history from 2014 on. And it was related, I mean, to the rest of the effects of the global financial crisis, and in my opinion, wrong or political economy from President Dilma Rousseff, who wanted by any price to enhance growth, but there was no space anymore. So she implemented a lot of policies that could not be sustainable, like controlling energy prices, like forcing the central bank, which was not yet independent. It is not independent, but now it is autonomous by law, to put down the rates, the policy rates, and the inflation came, social unrest, and all that came together in and that was worse for the to economic activity, and so we went down and down. After that, of course, as a result of all these corruption scandals and the economic situation, the country elected, some of the country people elected a far-right government, which was the worst disaster the country could have had. Because this government, the only thing it did was to try to destroy institutions, all kinds of institutions. But one thing we have to say, it didn't touch the central bank. It succeeded to pass the law to give autonomy, and this is, let's say, one point. Chile, if you all remember, before the pandemic in 2018, the social unrest and a lot of complications. So the election of someone, Boric, which is from left, and but nevertheless, and so I'm trying to be kind of flexible in time, because to talk about everything. But what happened is the left was elected, a very different Congress was elected to make a constitution, a constitutional committee, and the constitution was not accepted. Just talking 6 years in a sentence. So also unstable, but not as unstable as Brazil or Argentina. Colombia, the peace negotiations, as we remember, also a left-wing government was elected, but now this government has problems with his support, etc. Mexico, left-wing populist. And we know, but I have to go faster, sorry. Oh, okay. No, so I'm not going to talk the rest. Yeah, that's I already said, but okay. So why am I going to bring, or why was I intending to show you, bringing all this pessimist view? Saying that the financial system and the financial markets cannot work properly. And it's not because they're mean or anything, but also there are many characteristics of the financial markets in Latin America that must be taken into consideration here, like the very high degree of concentration, the gains with inflation, etc., etc. So there is financial markets cannot work well with all this. But what can we have, like, to try to build a kind of stability. And I think in the first place, it's important that 4 of these 5 countries have adopted still adopt the inflation targeting. And it's not to say that it is the system per se is crucial, but it brings some institutionality, it brings some security that is important to the whole economic policy, although there are difficulties and disputes within the governments. I think this is important. We have also, we are living a very difficult situation in fiscal policy. All the countries have had their debt growing. I have the data, but I don't have time. So why am I saying all that? Because the financial markets, financial stability depends on expectations and depends on regulation. Regulation, some of the countries have, like Mexico, Brazil, etc., but it's not enough if we don't have macroeconomic stability. This is the debt I'm not going to show, but just to show you what is the case of inflation in Argentina. This is the policy rate, which was increased to 97% a year last week. And with all that, I mean, and I see, Stefan, you could say, this is not enough to solve. Absolutely. It's crazy, I know. And inflation target is not the answer, I know. But what can people do? And I don't know. I think it's over.
Okay. I would like to address a question to Professor Fritz. Thank you for your presentation. It was really interesting to see. Yes, Federico Castiglioni from the Istituto Affari Internazionali in Italy, Institute of International Affairs. Okay, the question is, I was quite thrilled by your, you have shown us the optimal, how is the name? Yes, currency areas. Yes, I apologize. I'm a political scientist, not economist, so probably that's why. That's why I was quite interested by your presentation in particular. And my question is, at the very beginning of the European integration process, I quite remember in the 90s when we firstly discussed the possibility of such monetary union. Many contended that actually at the time European community wasn't one of them, was not an optimal currency area. So your point that actually is the currency that somehow triggers the institutional change and not the other way around may be in fact quite grounded. The same fashion, I was wondering why, in your opinion, we have not reached besides this trope between Europe and Latin America, which could lead us a bit astray. It's misleading from some viewpoints, but give us some insights. But if we took, for example, a complete different area of the world, such as West Africa, and the efforts undertaken by ECOWAS to adopt a common currency. Do you believe that in that instance, we do have an optimal situation to reach such an ambitious goal, or the situation is even far worse than the one that we see with the Mercosur, but the political premises are far better for integration? What do you believe of it? And yes, your viewpoint on this question. Thank you.
Yes, for Barbara, my question is slightly different, because for me, it's not very realistic to think in a common currency in Mercosur. It's what I think, it's what I believe. But my question is, do you think there is conditions, and is those conditions exist? What are those conditions that allow to deepen this use of the mechanism of payment in local currency? Because so far, it's very low. I would say symbolic. And I agree. I found your argument rather optimistic and different from the literature. And certainly is an expression of confidence between central bank and collaboration between central bank. That's very nice. But at the end of the day, the impact of these kind of mechanisms is important if they cover an important substantial part of the trade between the countries. Do you think there are reasons to believe that could be deepened in the future? Because, for example, you see that there is an agreement between Argentina and China to use yuan to pay a trade. So my view is that Mercosur is looking not in the region, but looking in outside the region. And for Maria Antonietta, has a doubt. I don't know. When your data about inflation, because I think we have to understand that data in the context of the global inflation. So in my view, inflation is not a problem for Latin American economies, with the exception of Argentina and Venezuela. In general, inflation was under control in the last decade. And this data, for example, 11% I think in Chile, at that moment, the UK was 11%. 8% in Mexico. At that moment, the United States was 8% too. So maybe this spike last year inflation is more related to the global inflation, a consequence of COVID, than I think a structural problem in Latin American economies. Just a comment more than a question.
Can I one or just
Yeah, I'm sorry. I would also like to address my question and my remark to Barbara, even though I liked all presentations very much. And as regards political advice, one has to be extremely skeptical as far as famous economists are concerned, because they live in their model world. And in the model world, the causality always runs from the real economy to the financial economy. But in reality, it could be the other way around. If we look at Europe in 1950, with tremendous differences, we had fixed exchange rates for 20 years. And it helped tremendously to promote economic growth and to stabilize the economy. Also, the euro area, of course, was not an optimal currency area, as my colleague also already mentioned. And the euro worked fine besides the so-called euro crisis, but this was due to the regulations, because the regulations focused on the fiscal deficit and the fiscal debt. What matters is the external deficit and the external debt. If Greece had a deficit, a fiscal deficit of 15%, and if this deficit was only financed by Greek savings, there would have been no problem whatsoever, as you can see from the example for Japan, for example. It is the external deficit which matters in such a situation. For that same reason, I'm not at all an expert on Latin America, but I do believe that providing stable financial conditions can very much promote the real economy, provided that it doesn't take too long and that in the transition period, you have very pragmatic rules. For example, a system of fixed exchange rates can very efficiently fight inflation, provided there is no free capital movement. If at the same time you have free capital movement and you have different inflation rates, then of course capital moves to those countries which offer, like Argentina now, 90%, and then they move out and you get into a crisis. The last question, finally a question would be, couldn't be the idea of Keynes, of his banker, be a very nice transitional solution? Why? You could create a supranational Mercosur currency as a unit of account. But in principle, in cases of emergency, but only seldom, it would be possible to change the exchange rate of the still remaining national currencies. But in principle, it is a unit of account and it is a fixed exchange rate system. It is pretty similar to the Bretton Woods systems, but the big difference is it is not the dollar which serves as the anchor, but the supranational unit of account.
So thanks for the lots and very good questions. I go by the order. Federico. Of course, theories are nice, and a nice word, which is closed. And we know that the real world is never a model, and it's not the same. When we look at the long European integration process, we see that the trade level really was higher. And here the European Payments Union played a role in re-establishing regional trade. But ex post models do not cover all the political economy which has been happening over this pace. And for a certain period of time, the main driver of interest of economic actors was for a stronger monetary cooperation in Europe, was that these fluctuating exchange rates were so disturbing, because now Europe has a fixed or abolished exchange rate with a common currency, with the euro, and it had fixed exchange rates as the whole world had in the Bretton Woods period. But in the intermediate time, from the 70s to the 90s, these volatile exchange rates really were something which was worrying very much economic actors, and by that also political actors. So yes, here you also can see a reverse argument that increasing trade required some coordination of the exchange rates. ECOWAS, trade levels are even lower than the Mercosur, because those countries have not so much other production than commodities. So this makes it a bit still a more difficult case. Part of the ECOWAS countries do share the CFRs, the franc zone, which is not a monetary union south-south, but which depended on the French franc, and now it depends on the French treasury and the euro. So it's a quite different setting, and going into it would require much more careful analysis to go into that. I did not want to be to appear too optimistic. It's not that I want to argue that yes, Mercosur will have and should have its common currency in the next whatever 10 years or so. Certainly not. what I try to argue against is the general perception that Latin American regionalism, especially of this kind, is really a dead end. And I wanted to hint towards an existing institution as an example for small regional mechanisms which are working on the ground and which could be used as a building platform. Well, of course, Lula and Fernandez did not refer to the SML, but some literature did. Science. I noticed something. Maybe you have to repeat your first part of the question. But the second part is, well, aren't these countries now going to more towards the use of the RMB, the Chinese currency, instead of an own currency? What we are seeing is we certainly do not see in the world the end of the US dollar dominance, but below that US dollar dominance, we are seeing increasing fragmentation, where the renminbi has already increased somehow its global role. In the numbers of the Bank of International Settlement, we can see an increased use of the renminbi, still below 5% at the global level, but it has increased from almost nothing. And this kind of fragmentation is something which we will see. So countries have to see where they place themselves in this fragmentation. So that's also a strategic question. That's my argument. Okay. Stefan, for the European monetary integration, fixed exchange rates only did hold until the 70s and the beginning of the 70s. After that, they had to deal with the problem of non-coordinated exchange rates, and for this entered into a period of coordinating their currencies, which was very key. So this supports the second generation, which I skipped here, the second generation of OCA theory, which says this is endogenous. When you have a common currency or you have coordination of the currencies, then trade and economic integration will follow behind that. I think still it's a valid argument, yet the second generation of OCA theory did oversee something, which Greece, for example, suffered from, and Spain, etc., suffered from, that you did have integration effects and harmonization effects. When the euro entered, all interest rates in all countries went down, like Spain and Greece, but it created other kinds of disequilibria, which were not addressed, and which ended in the euro crisis, which was not only a problem of fiscal non-discipline of Greece, but also of intra-regional north-south imbalances. So there's even more than only looking for the exchange rates. Okay. The banker as a transitional solution. Well, the banker never existed. The nice Keynes idea for those which are non-economists as an alternative to the Bretton Woods order was to create a global currency which would serve instead of the dollar as a global currency, and it would come with balancing mechanisms, balancing debtor and creditor countries. The question is what countries can do today in a very asymmetric and unstable global financial monetary order of non-coordinated exchange rates, of very high capital flows, etc. So this is really, it's difficult to imagine how you can isolate a region from these mechanisms. That's a problem. Internally, you can do that, maybe, but what is about capital flows? So yeah, okay, yeah. Okay. So, okay, I think I took enough time. Thank you.
Yeah.
Just before your question, just a comment on your comments on Mercosur in general. I mean, there's two things that you probably would agree, Barbara, on Mercosur and in this potential path to much more monetary or coordination. One is that one thing that Mercosur has not been able to do is to finish the customs union. That's kind of a very basic. It's not a precondition, but you need a customs union. A customs union. the model of the European integration is you go from a free trade area to a common a customs union, a common market. Mercosur has not even reached, it has an imperfect customs union. They have not been able to do that. It's true that put together a customs union is one of the most difficult things to do. That's why there are so few in the world, just very, very few. But that's one problem. And the second issue that I always think about when you think about integration, that we never talk about this. When we think about the European model, we always talk about the FTA, the common customs unions, the common market, the monetary union, so on. And we forget that one of the most important tools of European integration is physical integration. The railroads that were built, the routes that were built, so the regional infrastructure that we have in Europe, it's something that is completely missing in the map of integration in not only in Mercosur, but in Latin America in general. It's very difficult to increase physical trade when you don't have the physical infrastructure across countries. And that's, I think, is one of the big missing points. So I just wanted to comment on things that I'm sure that you would agree. But and when Oliver Blanchard or Krugman said, this doesn't make sense, is because the announcement was wrong, right? Absolutely. If the announcement was we will build an SML, I don't think they will have reacted like this. It's pretty fine. It's very, the United States has it. And so the problem was that the way that the announcement was made, right?
First, Jose, when I know, of course, you're right about comparing inflation rates of those countries with US or Europe, but what I think it's very hard in the Latin American countries is that because it's like as if we had like a inflationary trauma, and it's true that it has been under control. It's true that Colombia never lived in hyperinflation. Everything is it's true, but we have all the mechanisms in our countries to fight or to try to fight inflation, like informal mechanisms that are very, very bad to the functioning of the economy. Because, for instance, Brazil, although after 94 we have abandoned a part of the indexation, but it comes immediately to get again when inflation comes. And and although now in Brazil also we had a very high financialization because of also connected to social policies like Bolsa Familia, etc. Many more people have access to banks, and also what we have a very new thing that is a payment system with your phone. Anyone has it, and as Andrea was saying, the beggars at the street are saying that they accept when you say you don't have money to give them. And this is absolutely true, but it's also true that the lower income groups are not protected from inflation. And also there is something, I would say, pernicious in the the financial system functioning, the fact that the banks are very concentrated and have a lot of political power that impedes a change, that prevents a change, an important change. And that's why inflation is still a problem. It's still like a ghost. For Brazil and Argentina, I'm absolutely sure. Mexico is more disciplined, and Mexico has its central bank organized since '93, which is a lot of time. That's why I connect very much the functioning of the financial markets to the problem with inflation, because you see immediately when, and they are the ones whose expectation are used by the central bank to organize inflation targeting system. So it's all the time like pushing and coming. That's why I think it still matters a lot. This is one. And the other, I was wanting to talk to Barbara about that, but just 1 minute, we can talk afterwards. But I did a paper 2 years ago on the SML, and I also talked to, it's in a book organized by Ocampo that was published there in USP, at USP. But, and I'm not so optimistic as you are, but it's not only a question of being optimistic. It's also because during the talks we had with central bankers, what we saw is the whole system. Again, I'm not like paranoid that everyone is coming, but the whole system acts against this. And the first group which acts against the SML are the banks, because they lose, because you don't make the change, the exchange transaction. And so one thing, even you said SMEs are using that. It's true, because they don't have access to big banks. Yes, but when they go to their bank branch, the manager says, why are you going to use that? It's so complicated, it's so bureaucratic, and it's not. But in fact, it's really small. There are people from the central bank who had made like econometric tests on that. And I think there is some potential, but it's very hard to implement. This is one. The second point is when Lula and Alberto Fernandez presented the idea in January, I guess, was the first trip of Lula's first trip. They also tried to, exactly what, as you said, they communicated very badly because they used that idea. And in fact, what they announced is not even the SML, it's something smaller. And it's like just an agreement for payments. And that it's not dangerous at all for the economies. And yeah, so I don't know. I think the central banks, Mercosur central banks have been working since the early 2000 to organize and to coordinate financial systems. They have a group. I've been participating in seminars of them, etc. But everything is in place. They have informatics systems for everything, but it doesn't work because of the volatility of the currencies, because of uncertainties. That's why I'm so fixed on inflation and on expectations and uncertainty. Sorry.
Can we go to a second round? Okay.
Briefly, perhaps, because it's already 4:10. Just for Tony, again, because I'm not very knowledgeable about Latin America, why was the pandemic so much, the hits, the impact in Latin America was so much more severe than in other regions? And you said, you posed the question why the multilateral banks had this different treatment between global financial crisis and the COVID. Any ideas? I mean, you were working, you're a high-ranking officer in one of them, so perhaps do you have an explanation for that?
Thank you very much for the presentations. I have a question that I think all of you can contribute to. I mean, there are two questions. So the first question goes back to trade. So one of the main criticisms when it comes, or problems, right, that the literature and policymakers have identified when it comes to Latin America is the very low level of intra-regional trade. So today I was nicely surprised by Barbara's data in terms of trade, inter-regional trade being quite high or more active in terms of these very more technological sectors. So my question is, how and to what extent can we compensate with trade among these sectors for the low intra-regional trade in other sectors? And this, to some extent, I mean, this seems to be more of a sectoral approach, right? So if pharmaceuticals decide to come together, and it reminds me to the 1986 program of economic integration and cooperation by Alfonsín and Sarney, where the objective was to sectors to come together and to negotiate. So should we go that way? And to what extent that is feasible, right? And secondly, because again, the role of the central bank. So now, I mean, after my Antonieta's comment, I'm not so sure about this, but the SML, right? So seems to be quite driven by the companies, but also by the central banks. And I have this quote where you said, Barbara, that they didn't want crazy ideas. So this brings us back to a debate that's currently, again, on the agenda regarding to whether regional integration and cooperation should be more technical, functional, and less politically driven. So I'd like to hear your ideas on this. Thank you very much.
Good. I also bring some questions, and one is, of course, we are thinking about Latin American integration partially in terms of comparing, but also in terms of its own history of regionalism. And maybe just to contextualize that, it was a completely halt or suspension of all regional initiatives, especially under Bolsonaro. That was simply pull out Brazil from all multilateral and regional institutions, and from the Paris Agreement to all basically multilateral institutions. So this initiative, and I think this gesture when Lula went to Argentina, I think it was more of a representative gesture that they wanted to go back to the region. There was a lot being said about that, and I read it as they wanted to give something concrete, but the problem is that there's hardly anything concrete to give at the moment to Mercosur, because under Bolsonaro, they were discussing of rolling it back from this imperfect customs union to a free trade area. So that was this last paper that I just wrote. There was very strong support to simply roll back Mercosur to a free trade area. And in terms of the economic interests in all those countries, they are commodity exporters, and they are exporting more and more to China, especially Brazil and Argentina. I think their exports of soya and meat and so on, it's basically to China. So this is very concrete lobby at the political level, very different from the political aims of that government when it came. So I think just to contextualize that, the question is that, of course, we can have all these wishes, but the political context is such that if we add this element that was mentioned also in terms of the currency of China, that is a lot of political and bilateral, but also through even a retake of BRICS at this point of time with Russia as it is. I mean, even that. So I think it's in Latin America, there's a lot of pressure by China also to increase all those instruments and being the financial, but also, so I'm not pessimist, and we've been leading with regionalism for a long time, but it seems to me that even in the congruence of the interests of some governments, like the political agreement, the economic basis in terms of economic interests are very, very low. I mean, there's hardly any real sector kind of pushing for that. So the question is that, how can these political strategies stretch the real political economic interests? And that's agribusiness, basically in Brazil and Argentina. And agribusiness, they're not interested in the region at all. So the question to put it then to you all is that for the sake of reaching financial stability that we saw now, it's exploding again, not only Argentina, but I mean, there's always this say, if your neighbor explodes, don't expect that it won't reach you. So there is a real moment. So in terms of this financial stability from a global level, and then just to put the EU and all the discussions we are having, because we talk a lot about the EU, but they're all this global level. And to put a question also to Antoni, what role, even if inflation is a problem, still we know that there are gaps of funding for all those instruments, the social policies, but also sectors, no? Sectors that are in the program, for instance, for Lula to industrialize. So how can, I mean, financial stability come from, not perhaps domestically like Mercosur, or what can, in that sense, at the global level, can we expect anything? And in terms of the regional banks, that unfortunately, of course, we didn't have the presentation by Stephany, but I'm sure she would talk about that too, like you did. What role of the regional banks? Because what we know is that there are a lot of domestic development banks very active in Brazil. The domestic BNDES has been always a motor to fund development and to fund strategic sectors. As far as I understand now, even in this new Lula government, they also want to, again, invest in infrastructure. That was the Lava Jato, that was the lawfare case. The idea was to build infrastructure. So they want to do that again. But unfortunately, so far what we hear is that they also want to fund oil again and all this commodity. So it's a bit of a trap. So what role can the regional banks have in that context? Because they're the national development banks, and maybe they're not going much into the same direction in terms of even sectors that they want to fund. So there will be much more, but I think we let's close the round. And or anyone else? Okay, Jose.
Question to Antoni, complementing your question. You said that one of the problems for Latin American regionalism is the lack of infrastructure. We had a problem, we have no connection between the South American, Central American countries. The problem is it's very high. It's very expensive to build infrastructure, especially considering we have the Andes and we have the Amazon in South America. My question is, what has been the role of the regional banks? For example, the Inter-American Development Bank in promoting this kind of, infrastructure? Because I remember that IRSA, the initiative for regional infrastructure for integration in South America, was mostly financed by Brazil and the BNDES. Some contribution of China, because China is interested in building ports in the Pacific. But what has been the role, particularly of the Inter-American Development Bank, in this issue? Thank you.
If you can start now.
I found your analysis very interesting, that the MDBs were much more capable to scale up their credit offer in the global financial crisis than in COVID. I have a hypothesis here, and I would like to ask you if you agree with that, that it was much easier for the MDBs to do somehow of a mission shift in terms of providing short-term liquidity, which was where the member countries were in high need, than to provide public global goods, which were needed in the COVID crisis. So if you agree with that.
See, I'll start with this, Barbara, because it's the same question of Dimitris, and I agree. That was my answer. In a financial crisis, to provide liquidity, which or just budget support or reserve funding, that was much easier. This is it's very easy to do in terms of operational and how you actually put together this package. When you have a COVID situation where the big problem was, one of the big demands by countries was to strengthen the health sector, to provide vaccines, to distribute vaccines. All these programs are very difficult to negotiate, to procure, and the response was not there. I mean, the banks are not prepared to do this type of operational. The business model is not for that particular type of programs. That's kind of the major. There are other reasons, but that's the major reason. Dimitris, just on the question of why COVID affected, well, first, the region was the one who had more cases, so that's kind of an exogenous thing for whatever reason. I think, if I remember well, I think it was like 16 or almost 20% of global cases were in Latin America. So that meant that you had to put what is called, what in that language at the time was called NPIs, which is non-pharmaceutical interventions, which basically close downs. The region was one of the most, the region who implemented more strict, stringent close down policies. So that's one of the main reasons that basically the stop in economic activity. Of course, if you add the lack of fiscal capacity, the lack of safety nets to actually compensate for this basically stopping total economic activity, that's, I think, what explains why COVID was so hard in Latin America. That's no. On the, I think well, the other question was the one that Barbara had. On the NDVs, yeah, this is too bad that Stephany is not here, because I'm sure that she would have made the case. This is a growing, I think, I wanted, this morning, the intervention by the first speaker, when we're talking about the Hellenic Development Bank, there's a huge ecosystems of development banks today. There are more than, you will not believe the number, but more like than 3,000 agencies that could be called a public development bank today, starting from the big ones, the World Bank, the regional, to the national public banks, some specific agencies. It's a huge ecosystem of development banking. And this is a problem in the way that this system is very fragmented. So unless there's much more coordination, much more collective action operationally, if you look from the point of view of for example, the donors who have major funding to these banks, I mean, this is a fragmented system. We compete for the same funding, and the system is not working in an efficient way today. So that's kind of an issue, and that's why I mentioned that one of the big issues of discussions in how better to coordinate this ecosystem of public development banks. That's, I mean, there are other reasons, but I would this issue between fragmenting the global financing development and a much more multilateral approach. The World Bank always, they like to see themselves as the center of the universe, and they are calling for that, and that's not going to happen. But that's one way from, the big brother wants to be the one who coordinates the rest. But that's an issue. That's an issue how you actually structure this system that is kind of is growing very, very. This is not to say that they don't have a role. I think the national development banks, regional development banks have a very specific role. It's just more an issue of coordination. And this links a little bit with the question on infrastructure, because this is what is it. I mean, to coordinate regional infrastructure is a huge effort in coordination, because the cost and benefits, I mean, the typical example of that is that if you have a country between Bolivia, between Brazil and an intermediate country, Paraguay, for example, right? What incentive has Paraguay to build an infrastructure that will link Brazil and Argentina? If the benefits are, the costs are there and the benefits are not. So you have to have some external actor that provides some concessional funding for that country to actually accept to be part of the. And this is the experience of the European Union. The European Union had the European Investment Bank. The major role that had was actually to create this balancing between cost and benefits when there are different countries that will. So it's a coordination issue. The bank in the case of the IDB, but also this is true for the World Bank or the Asian Development Bank, which actually Asian Development Bank has been quite successful on that, or the European Investment Bank, which is the best case. One of the roles is to actually do this kind of coordination role between countries to actually agree on what will be the best infrastructure that you need. The European Union, as you probably know, they have a very top-down approach. You go to Brussels and have these beautiful maps on what will be the best regional infrastructure, but then the countries have to agree to actually borrow against those plans, and there has to be some concessions, some grants that have to be put on the table. So it's a very complicated kind of mechanism that needs to be in place. And there's another reason that this is not happening is, again, I mentioned it briefly. these big institutions, we are still very much thinking about the country. It's a country-focused institution. You just think about programs that can be implemented inside the national borders. It's the instruments that we have are not kind of cross-regional financial instruments, which are much more complicated to develop. Like this, yes. I think I touched all of them.
Just one information, I think it accounts a lot for this disaster, the fact that Bolsonaro did not acknowledge the pandemic, and that at least for 2 years, the country didn't do any. And in the case of Brazil, there were more than 800,000 people dead, almost 1 million, only behind the US, I think. I think the statistics of the region was completely pushed down by that. Right, so, well, thank you very much. We continue tomorrow, so I thank you all for coming here. I hope those who are not from Latin America learned a little bit. And our exchanges between the US, between the EU and Latin America, we all learn a lot from each other, hopefully, for learning and improving the situation in both regions. Thank you very much, everyone, and Dimitris.